Look up, the sky is not falling. If you watch the news, you would think that the sky was falling. Hey, the housing market's gonna crash.
Warning that the U.S. is showing signs of a brewing housing bubble.
What it called a brewing U.S. housing bubble.
Mortgage applications are down. People are scared. Leo Brainerd basically said, hey, we need to rapidly reduce our balance sheet. Yet they're still, as of last week, they're still buying mortgage-backed securities. My answer to her is shut up. Shut up and take action. All right? Nobody wants to hear your sky's falling. You know what? If you say you're going to stop buying mortgage-backed securities and start selling them, then stop buying them. If you're going to raise the Fed funds rate, freaking A, go ahead and do it because you should have done it a while ago. It's worse to be unemployed than it is to have high inflation. Hey, you know what? They both suck. But you know what, Fed? You're responsible for them both. Shut up and do your job. We don't need headliners. We need action. This was supposed to be a quiet news week. It really was. Like, you had some Fed speakers talking, and you had the Fed meeting minutes coming out, and that was kind of those were big movers this week. Well, guess what? Fed Vice Chair Leo Brainerd, who has been a very dovish Fed member for much of her time on the board, basically came out with like talons and like on fire, and basically said, hey, we need to rapidly reduce our balance sheet, meaning the Fed needs to stop buying mortgage-backed securities and treasuries, start selling them, at a clip of 50 billion a month, maybe almost 100 billion a month. Now, here's the crazy thing. The Fed is saying this, other members are saying this, yet they're still, as of last week, they're still buying mortgage-backed securities.
Given that the recovery has been considerably stronger and faster than in the previous cycle, I expect the balance sheet to shrink considerably more rapidly than in the previous recovery, with significantly larger caps and a much shorter period to phase in the maximum caps compared with 2017 to 19.
My answer to her is shut up. Shut up and take action. All right? Nobody wants to hear your sky's falling. You know what? Inflation is high. Absolutely it is, and we're all suffering for it. But don't make it worse. Don't make it worse by saying that, here's what another one, the San Francisco chair says, that high inflation is worse than being unemployed. Well, that's if you're saying that, you're not helping solve the problem. You know what? Solve the problem. If you say you're going to stop buying mortgage-backed securities and start selling them, then stop buying them. All right? But you do it. But you don't start talking and babbling on and saying, it's worse to be unemployed than it is to have high inflation. Hey, you know what? They both suck. But you know what, Fed? You're responsible for them both. So shut up and do your jobs and stop getting on the news and trying to make a scene with the highlight, all right? With the headliner. We don't need headliners, we need action, all right? And that's my takeaway, all right? The Fed has created a crazy week, man. I'll tell you what, interest rates yesterday, man, they shot up. They shot up to the highest they've been since 2018. We had interest rates in a 5 percentile range. That's certainly for conventional. And they spooked a lot of people. You had Jim Cramer. I'm a huge Jim Cramer fan. I love him. I love listening to him. I think he's doing some great things. But even yesterday and today, he's freaking out. He's selling off a lot of his stocks because he was alarmed by how hawkish the members of the Fed are. And he's talking about, hey, the housing market's going to crash. All right, the housing market's going to crash. Mortgage applications are down. People are scared. Well, you know what? I think Warren Buffett said, when there's blood in the streets, that's when you buy. All right, when everyone's all partying in the streets and spending money like it's crazy, that's when it's time not to buy. Well, you know what? We don't even have blood in the streets yet, but it's still a good time to buy. Here's a couple other things that are weighing on us, all right? Deutsche Bank, first major bank to say that we're going in a recession. All right, I talked about this last week. I think I talked about this maybe a couple weeks before that. Actually, I've been talking about it for a month now, right? Because of the Fed's action, because of what the Fed has to do to bring inflation down, where there's not going to be a soft landing, it's going to be a very hard landing, and our economy is going to feel it, and our country's going to go into a recession. They didn't really say when, again, but just by saying that, one, they're the first first major bank to say that. Again, they create alarm in our country. All right, here's a couple other things that are weighing. Supply chain issues are not going away. China, they're on lockdown again. China's on lockdown again because of COVID. All right, that's a huge impediment to our economy. You got Russia and Ukraine. All right, the sentiment right now, Russia-Ukraine is big negative on their economy, and trust me, the effects of that are going to bring Europe into a recession. The chairman of Joint Chiefs of Staff, General Milley, today, I forget who he was talking to, said that he expects the Russia-Ukraine war to last for years. Well, that's a pretty bold statement from the head of our military, the uniformed head of our military. That's a big statement. But if that's true, that's not going to be good for our economy. And for none of these things are good for inflation. So this is the backdrop that the Fed is operating in. And again, I respect the job they have to do, but just do your job. All right, stop creating headlines and do your job. Do the 50 bits, raise the Fed funds rate. Stop buying mortgage-backed securities. Do what you gotta do. Stop talking about it because you're freaking everybody out. So let's get into the housing market. All of this is around the backdrop that frames our view on the housing market. All right, but let's talk numbers. All right, prices are up. All right, CoreLogic, their report for February came out. Highest appreciation, measured appreciation in 45 years since they've been doing this report. All right, 2.2% appreciation in February, 20% year over year. All right, for CoreLogic's, I tell you, they're funny because their forecast sucks. I don't know if their forecast has ever been right, but like a broken clock is right 2 times a day. They figure, well, if we keep giving really crappy forecasts, one of these days they'll be right. And they're forecasting a 0.6% appreciation rate in March and 5% appreciation for the rest of the year. And I just think they're out to lunch. All right, and I'm going to talk about that in a minute. So today, they have brokers opens. I talked about brokers opens last week. All right, that's where the realtors have open houses for other realtors to come in and take a look and get a sneak peek before the weekend. So we went out today, and several agents at these brokers opens, and there were more this week than last week, were saying, hey, you know what, we're not getting 30 offers anymore. All right, do you have a VA buyer? So they are asking my loan officers if they have buyers, all right, and in particular VA buyers. So guess what? The market is shifting a little bit, right? It's still a seller's market, but it's a little more it's going to become a more balanced market. Whereas there were 10 buyers last week, 4 of them are scared, so there's 6 left, all right? And instead of being 4 houses to choose from, there's 6 houses. So guess what? Every person's got a home to choose, right? We're kind of becoming more balanced, right? And that's what I see coming up. Rates are higher, absolutely. And let's remember this, for those of you who are thinking, I can't buy a house now, rates are too high, I got 2 things for you. 1, stay in your budget, know your budget, and you won't be. 2, that first rate you have on your home is not going to be your last, because what did I start off with? Talking about a recession. When we go into a recession, and we will, again, it's going to happen. It ain't going to happen tomorrow. The economy is starting to slow. It's going to continue to slow, but we probably won't be in a recession for another year. But every time we go into a recession, guess what? Interest rates go down. Inflation comes down, interest rates go down. That first rate you have is not going to be your last. Within a year, you should be able to refinance and lower your mortgage rate and lower your mortgage payment. So don't be afraid. But here's the other thing. If you wait, chances are you're going to have less buying power because housing prices are going to continue to go up. That's what I got for you guys. Tough week. But don't believe all the hype, all right? Know what's going on, but also take it with a grain of salt, all right? These people are looking for headlines. I'm not really looking for headlines, but I'm trying to report on what I'm seeing. Housing market's still strong. going to get more balanced. All right, rates are higher, prices are higher, inventory's still low, still a good time, and it's getting better for buyers. Your rate, it may be higher now, but it'll come down. All right. Again, every home I bought, I've refinanced and lowered and saved a ton of money. All right, that's all I have. Please like, comment, subscribe. I love your feedback. And somebody last week said, "Oh, you can't trust a realtor." I'm not a realtor. You can trust me. I'm a loan officer. Hey, if it don't make sense to buy, I'll tell you. But it's still, and some people it might not. But right now, I will tell you it is still a good time to buy a home. All right. And if you think you're that person where it might not make sense, before you make that decision, get an educated view on the market and your ability to buy a home and pay a mortgage in this market. You're paying a mortgage no matter what. All right. It's either yours or someone else's. All right. That's all I got. Have a great day.